Some leaders leave footprints, others leave libraries. You're tuning into the Authors on Mission podcast, where industry giants become literacy legends. In every episode, we talk with authors who turn their brilliance into books that transform lives. I'm Danielle Hutchinson, your host and Chief Creative Officer at Authors on Mission. Welcome to your authorship experience. Hello and welcome to Authors on Mission podcast. Today, I want you to start by closing your eyes and imagining this. You're sitting in a European cafe, enjoying dinner with a couple who seem to have cracked the code on retirement. They're not worried about market crashes, they're not selling investments to pay bills, and somehow they're generating more income now than when they were working. It kind of sounds like a fantasy, but it's not according to today's guest. Please welcome Steve Selengut, the #1 Amazon bestselling author of Retirement Money Secrets, and a man who spent over 4 decades managing hundreds of investment portfolios of more than $110 million. But here's what makes Steve different. While most financial experts are chasing market gains, he's focused on something more valuable: income independence that works for markets whether they crash or soar. So today we're going to go behind the scenes of his book that's changing how people invest. It's changing how they also sleep at night and relax and are comfortable with their status. And we're going to explore why traditional retirement planning might be setting you up for failure, discover the secrets of some income-focused investing, and along with all that, we're going to discuss some amazing writing secrets. So whether you're an aspiring author or looking to make an impact, or someone who's looking for some investment advice, this episode is going to be incredibly useful. Without further ado, I would love to welcome Steve Selengut to the Authors on Mission podcast. Welcome to our episode, Steve.
Well, thank you, Danielle. It was quite an introduction.
Yeah, it's, we always have to immerse our listeners into the world of what your book's all about, and what better than imagining a perfect retirement, right?
Right, exactly.
So, I'm really looking forward to all of this. I'm wondering if you'd love to give us a little bit more background on yourself before we dive into some of these investment tips. What on earth led you to writing about investment? Writing about retirement. I'm sorry.
Well, it's writing about investments in retirement, so you got it right both ways. It gets, after a while, I've been doing this for so long, and I've really been in contact with or influenced or at least been read by thousands of people. Over 7,000 have read Retirement Money Secrets. And that doesn't even include all the hundreds and hundreds of people that I managed money for over the years, and maybe another 100 or so that I've coached since I retired 2 years ago. But when you get to be my age, you start to think, I don't have a whole lot of time left. And what I've done has really created value for a lot of people. I mean, I have created millionaires, many of them, and produced early retirements for many more, and so on. I wanted to get that information out there to as many people as I can, because they just don't get it from their professional advisors. Not because of any malice intention or anything like that, but just because Wall Street has pretty much brainwashed people into thinking that you got to go for that holy grail. You got to get that market value up into 7 figures, and then it doesn't matter how much of it you spend when you retire. This is the way advisors are taught to invest and manage their clients' wealth. And I've done it differently. Market values grow when the markets go up, or interest rates go down, even when you have an income focus like I do. But the important thing is that when they go down, you're still getting the income, and you don't have to depend on selling securities to pay the bills.
Definitely. And so it's interesting, like, have you learned all of these tips just purely from experience then? Is that correct? I mean, you've been investing for over 50 years. You became an SEC registered investment manager all the way back in 1979.
Yeah.
So it's been a while. Would you agree that you've learned purely from experience or in picking up tips along the way?
I got some tips. The biggest tip I think I got really was from my dad without even knowing he was giving me a tip. He was a real estate developer in North Jersey at a lake in part in Morris, part in Sussex County called Hopatcong. And he was one of the first developers up there. And he was early on enough that he didn't have much competition, and he was able to develop an integrated company from having everything from a lumber yard that the contractors would use that worked for him to get the materials, to the development of the land. He had rental properties. He provided insurance coverages to buyers and tenants, and he even did the mortgage lending at lower than bank rates so that people could afford properties there. Initially, it was mostly summer homes, little cottages on the lake. He built a beach there. It had athletic fields, tennis courts, the whole, he was a resort owner before the ideas of resort had even hit home, So I got the message from him that diversified skills and income production were key elements. He also sold property, so I knew the idea of selling and things like that. But that's where the original came from. Tips you get by experience. You learn that buying quality securities is very, very important after you lose money on your first tip, or your first wild hunch that this is going to be a good one or that one's going to be a good one. You learn it's better to look for experience and quality and dividends and judge the quality of something you invest in. Diversification, I don't know, that was kind of natural to me. It just made sense, the old not to have your eggs in one basket type thing. Income production, like I said, my dad drilled that into my brother and I from day one, that, you have to have income. You don't live like this without income. Doesn't matter how wealthy you are, you gotta have income. Most of it I had learned early on. Most of it was there, and adapting that to the stock market was not difficult. Finding income securities and securing them for people was a little bit cumbersome in those days. Remember, I started in days where I didn't even have a computer when I started working for others. I went to their home, sat down with them, looked at their last paper document they had gotten, and we talked about their portfolios. There were no IRAs until the 80s, late 80s. No Roth IRAs until later than that. 401ks didn't exist. I had a pension plan at work, a defined benefit plan, and we also had a defined contribution plan, which is what eventually became the 401k in today's world. It was an employer match type situation. I really grew up in finance. My last job was in a pension investment department of a big life insurance company. And I traveled all over the country with investment managers talking to the HR people for the investment programs for the employees. So I saw what was inside, and I asked questions about how they managed money, because I had just, at age 25, the money that my dad saved by not sending me to an Ivy League school like my brother, and percentage of everything I had earned as a kid, from truck driving to mowing lawns to water ski teaching, all the money that I gave him to invest for me came back at me. And in 1979, a nearly six-figure portfolio was a whole lot of money. And I wasn't about to take a chance to lose it. So there was pretty much no risk in what I did. It was big name companies, dividend payers, and so on. So within 8 or 9 years, I was in a position where I was making more money investing than I was commuting to New York. And when you net out the costs of three-piece suits and commuting, I was making a whole lot more money, investing than I was in commuting net. So I just, as soon as I vested in the pension plan, I had to work there for 12 years. As soon as that day came, so I already had incorporated. I already had started my testing to get registered with the SEC when I quit that company. I was making 5 times my salary. Today, I have people in my community that are telling me that they're making as much as they did when they were employing with their investment programs. I'm making more right now than I did when I was managing 110 million money for people. 110 million in investment money for other people. I'm making more now. So it's a process that focuses differently from the mainstream Wall Street approach. Quite a bit different.
First off, congratulations. I mean, this has been an incredible, journey for you, from being inspired by what your father said to putting it in practice yourself, and also learning that you can make more just by helping others with this approach rather than the traditional, job, commuting to New York, like you just said. So
yeah,
it's wonderful that you were able to grow this to the point now where you have a book out and you're just, able to influence people just by whoever picks up your book too, which is incredible to think about. I myself was looking through your book, and you do challenge a lot of the traditional strategies that people use for investing and getting ready for retirement. I mean, for example, I also work as a teacher. I kind of just signed myself up for the, standard, things they recommend when you first get your job, the 401k. But your book challenges that and challenges a lot of the other fundamental premises. For example, the buy and hold investing. One of the first things I saw when I was flipping through is that you describe how it is, not the best choice. You challenge the conventional wisdom that's been prevalent for decades. So I guess my next question to you then is, if you could share with our audience, what are the specific risks that investors face with this approach, and why do you advise against it?
Well, buy and hold, so long as in the very, very long run, the market, the size of the economy, the population, all of these things have grown in the U.S. over time. And even though there have been recessions, there's been a couple depressions and things like that, overall, the trend has been upward. So yeah, if you were to buy something that was a high quality company that had interesting products and was flexible enough to change, like not the buggy whip manufacturer, the one that was smart enough to stop doing that and start producing automobiles instead of buggies and stuff, you know what I mean? You had to have those types of companies, and they're out there and they're easy to find. But you have to have a discipline. Here's a story that'll describe it. When I first started investing back in 79, and by 82 I had found a broker that I could work with that really was interested in what I was doing and doing it differently than what he was doing. And he told me stories about when he really first got started in investing. Every morning they'd have a meeting, and the manager of the office would tell them what the stock of the day was. And their job as brokers was to go through their card list of clients and the phone book and whatever else and call everybody else and say, hey, you got to be looking at this stock. It's really good. We think it's going to be another so-and-so. It's going to. That was the mentality. They were told to sell something, and it was their job to sell it to their customers. There was no, if they even looked at it, I'd be surprised, So that's basically the mentality that we have with Wall Street. There's still the IPOs. They get all excited when these companies go on Wall Street and they ring the bell and they announce the new issue. And occasionally there's going to be a Microsoft. I mean, way back there was even an Esso or a Mobile, but for the most part, about 90% of IPOs don't make it. Some of them get as far as going bankrupt and being bought up by somebody else, but most of them don't become the NVIDIAs and the Amazons and the things like that. So it's a speculative world and it's a speculative mentality. Even the vocabulary is more Las Vegas than it is investment. We're placing a bet on this. I'm not placing a bet. I'm investing my money in a known entity that itself is making money, that itself is diversified, producing income, paying its shareholders out of respect for their ownership instead of just paying their CEOs billions, literally, of dollars and zero. NVIDIA has never paid a dividend. Microsoft pays less than 1%. Amazon, I don't think, pays a dividend at all. Biggest companies in the world, their shareholders only will reap a benefit when they sell their stock and actually take the money and do something with it. So it's that type of difference. I treat my portfolio, instead of buy and hold, if you were running a retail operation, would you want to see the value of your inventory go up? That's the last thing you want to see. Does any company want to see that? Does any company want to buy and hold? I've got this property, I've got this business, I'm just going to stick with it just like it is no, they want to grow that business. They want to reach out, they want to start new things and develop. And that's how managing an investment portfolio be. You get something good, you have a lot of different things working for you. Somebody comes into the store and wants to pay your markup, you sell it and you replace it with something else. That's how I started running my portfolios. My broker and I developed a list we called the Investment Grade Value Stock Index. And I had a client who was in that day, whatever high tech there was back in the early 80s, that was him. Today's high tech is a whole nother story. But he developed an index for us from a list of 200 odd stocks that we felt were quality. All of them paid dividends. All of them were traded on a New York Stock Exchange. So we developed an index of that, and he tracked this index for us. So it was really kind of cool because nobody else had that. They all had other indices that they looked at, but it didn't just have New York Stock Exchange and just dividend payers and so on like we did. So we did a lot of things that were different from what everybody else did. And I used to tell my clients, most people will deal with a financial planner and an advisor, and they rarely, I would say, show them their own personal portfolios. What I did for my clients, I told my clients, I will never, ever put you into a security that I don't own personally. If I don't own it, you're not going to own it. And that was, a confidence builder, I think. I mean, I didn't get a call from anybody in 1987 when the market crashed. I didn't get any in 2000. You probably don't remember any of these things, but in 2000, we had what they called the dot-com bubble burst. That was when high tech really came on board, and the NASDAQ just blew up and went crazy. And the broadcasters on radios used to call it the no value rally. In other words, a rally in companies that had never, ever shown a profit, ever in their existence. But people were paying hundreds of dollars per share for stocks in this new tech entity that was coming up. In the meantime, all the good companies were down because all the money was shifting from the good companies, from the non-tech, high-quality companies into the tech, because that's where the action was. So that created this bubble, this explosion. And my investor said, Steve, why aren't you going in there? I said, you're buying companies that haven't even shown a profit yet. I'm not going to do that with your money. I'm not going to do it with mine. Some people fired me because I wouldn't go out and buy them these new issues and stuff, but that's okay. That was okay with me. And then finally, when it crashed, of course, they all went down and all that money went right back into the good stuff. And so while everybody else was bleeding, we were making huge profits during that bursting bubble. We made a lot of money. So it's a different type of approach. Quality, and income. You just have these four basic things that keep you in a lower risk environment. New companies will never pay dividends, so you don't own them. You don't own them until they become profitable and pay you a dividend. It's that simple. You just have to be disciplined. I teach discipline.
Yeah, well, it's really clear that, your strategies really helps people not to obsess over whether the stock is rising or falling. It tells them not to focus on the wrong goals, but the right ones, and really just, shift your attention towards real, true income independence. And it works, based on what you've seen over all of these years. I can see how it's so valid. And being that you've been so successful sharing this with others, it's only right that you put it into a book to share with more people so that anybody can pick up the book and learn from it too. Speaking of which, I see it right there behind you on the shelf. I'm wondering if you'd like to hold it up and show it off. I mean, we should take a look at this cover here and see where to look for it now that we know how useful it is. I love that diagram right there on the bottom. It's sort of a rising chart of how you can grow your funds. I guess that's the inspiration for it. Is that correct?
It's supposed to represent the income growth, not the capital, not the market value growth, but that's what it's all about. You got to grow that income. And the thing about this strategy, and the strategy now there's a thing called closed-end funds. It's actually the oldest fund there is available out there. It's a trust. And let's say in the stock market, you'll have an equity trust that owns hundreds of securities. All the stocks you hear about, all the NVIDIAs and the ones we mentioned earlier, those will be in these trusts. And these trusts pay 10, 11% in dividends. Typically on that's the annualized rate they pay monthly. So every month, regardless of which way the market's going, you're getting a dividend check. You're getting a distribution. And if the market goes down and you get that distribution, you can reinvest it in something at a lower level, at a higher yield. So the principle is that you have all these closed-end funds containing every stock possible that anybody owns, probably. When you own enough. I own 100 different equity closed-end funds and 100 different taxable income closed-end funds. And so I've covered all the bases. So if interest rates go down, my income stuff will go up. If the stock market goes up, my equity funds will go up and I can take profits. But the thing that most people don't realize is that even though the market is an upward trending thing with our economy, and I don't even think the present day tariff problem is going to last long enough to really impact the economy long term. So I think we'll continue to be an upward growing economy. The market, however, doesn't just go up. It varies. It goes up and down with an upward trend. And you can manage that in your portfolio instead of having action. Most people sell when the market goes down and they buy when it goes up, which is exactly the opposite of what any person does when they're shopping anyplace else, right? When it's on sale, you buy it. When it's too high, you go someplace else or wait until they have their Christmas sale or their after Thanksgiving Day, that type of thing. In the stock market, it's just the opposite. The hawkers want to sell you when it's up, and they tell you to sell it when it goes down. And it's just the opposite of common sense. And if you have quality companies, it's particularly the opposite of common sense. So what I do is I develop these portfolios of trusts that contain securities and pay regular monthly distributions. And if you look at their histories, you'll see that regardless of which day the market or interest rates were going, they consistently pay their dividends every month. When people in my community, when they see the market goes down like it did, I guess it went down pretty substantially on Friday, they're not pulling their hair out. They're rubbing their hands together because they see it as an opportunity, to buy things at a lower price that are of a high quality at a lower price. just like going to the mall to take advantage of the sales.
Well, thank you for all of this advice. I can see how you just have a wealth of knowledge packed into this book. Anybody who picks it up can learn a ton. I mean, I just learned, so much just by listening to you right now. So it's truly incredible that you took the initiative not only to guide people through many years to help them with these strategies and techniques, but again, that you put it into this book. So I'm thinking now we should probably transition into the writing process for this book. All of the authors out there listening to this podcast today also might have some tips that they want to share, whether it be about investing in retirement or about some other financial-based topic. So I'm wondering, how do you take such, concrete tips, so many years of experience, and translate that into a book? What was your strategy for creating this book?
Oh, you're gonna love it. I had a ghostwriter. My first book kind of failed, so I wanted to get this one done a little bit more professionally and mainstream, so that I definitely have a publisher lined up the whole time. First thing I did was I hired a ghostwriter, and it's not small change to do that. But the interesting thing about her was that she was 60-ish, having had a successful career doing what she did and so on, and has a nest egg put away. And her nest egg was, like everybody else's, generating less than 3%. And I was talking about how mine was generating 10%. And so the book's job was to tell people how to go about doing that, how to get from where they are to this place where they're making all this money. And she was primed for that because she needed to know. She was getting ready to retire. How am I going to change my advisor from doing what he's doing to doing what you and I are talking about? So we put together a conversation. A couple, myself and my wife, talking to a couple we met on a biking cruise starting in Amsterdam. And they just happened to live in Virginia, so they could come down after the trip and visit, and we played golf together. The whole time talking about different areas of the investment process and why this way was more income productive and safer than the other way that they had been using. So it's a 260-page conversation with this couple on how they arrived at the idea to transition and how they did it. And it's finished with a Q&A with a Facebook group that I was running at that time and still am, where all the participants were asking me questions at different times about this particular process. The book is a conversation and a Q&A session instead of a lecture. My first book was like a professor telling you all about bonds and stocks and stuff like that. It was really kind of dry. And this one is, well, quite a bit different. I understand it's an easy read or an easy listen if you use the audiobook.
No, it definitely is. And I think the reason why is because you do make it, you do add those stories that make it relevant, interesting, and connect with the readers. I mean, the Amsterdam dinner story really did bring the concepts to life, for example. So I think it's a great way of presenting the information in a way that doesn't, just drone on about facts, but connects with people and wants them to learn more about it. And therefore, guides them to learning more about your strategies and reaching out to you, for example. I'm sure have you had many people reach out because they've read the book, for example?
Oh, yeah. I mean, I think 65% of the now nearly 500 members, we just started this community in December. We got nearly 500 members. 65% of them heard of me first from the book, and maybe another 20% from podcasts.
Well, that's incredible. And I guess that just shows the true power of promoting yourself too and getting on these podcasts and talking about it. The more you talk about these strategies, the more people are going to hear about it, be interested, want to learn from it. And that's, an incredible tip for any author out there. You can't just put out a book and hope that anybody's going to pick it up off the shelf and read it. You need to talk about it first.
Right. And I think we all want to make some change. We all want to change something. When we write these books, there's a message, and the message of change that I'm looking for is to create a financial community that focuses a whole lot more on income production for old people, you know, like I hope you get to be someday, 40 years from now, but that focuses on their need for income and the fact that they want to leave a financial legacy for their kids. They don't want to just spend it all. They want to live well, and they want to maintain and even grow that nest egg that they created for their families. And Secrets tells them how to do that. And I'm hoping that someday the financial community will want to do the same thing.
Oh, definitely. And I think that, with this out there, you're going to be influencing more and more people to do so. And, just as a quick question, if people do want to reach out and learn a little bit more from you or even to share feedback about the book or stay up to date, where can they do so? What are some of the best platforms for them to connect with you with?
Well, I'm on Facebook with my name, and I'm on LinkedIn as well. But I have a website called theincomecoach.net, and it has personal links, phone numbers, addresses, hookups to the income investing community, and so on. So if they get the book, actually, it's the best way to get all that contact information easily.
Well, perfect. Well, then everybody needs to check out the book, and then you can get more contact information. We're also going to put some of the links in the description box of this podcast today, so go ahead and click on over and learn a little bit more. But Steve, I'm wondering, you have the book out, you've gotten a great reception from it. So what's next for you? What can we be looking forward to in the future in terms of next on the trajectory?
I'm going to just try to stay healthy for another 10 years and healthy and active for another 10 years. I don't plan on writing another book.
Oh, no. Okay.
I can see we're doing a lot of stories, people in the community. I think we've already had 6 YouTube under 15-minute sessions, between 5 and 12 minutes, where these guys and ladies are getting on there and talking about their experience with income investing and how it's changed their lives. We're doing that. I just did a podcast with a new podcast. It's called Yield to Reason, where it's a guy is trying to promote income investing, thinking of yields and the reason and why, and he's also interviewing experienced closed-end fund investors using my process to do that. My episode, I think, comes out on June 2nd.
That's something great to look forward
on that
to.
one. But that's my main gig now, is getting the message out there.
Well, hey, that's a perfect way to go about it. Again, like I said, you need to spread the word, you need to talk about it and get people interested enough to learn more. And speaking about learning more, what other tips might you offer to our audience as we begin to wrap up? What would you like to leave them with today? It's something to hold on to, maybe implement in their own lives as they get off the podcast today. What can we do to help us with our investments?
The one thing they should do, if they're looking at their own portfolio, okay, to make sure that they're diversified and that all the securities they're invested in produce some kind of income. I think that's a good start. If they're using an advisor, look at their accounts, and if the yield on their investment, meaning the actual dividend income they're receiving, is less than 3%, talk to your advisor and tell them that you want them to produce 7% or more from their portfolios. And you can show them how to do it by giving them this book that I just read. And if they don't want to do it, tell them you're going to find somebody who will. And that'll wake them up real quick.
Good. Yeah. Well, thank you for that. And definitely we'll be able to now use that, tell about that, ask about it and make sure that we can do the same exact things. This is absolutely fascinating. People think that, I mean, at least my opinion of retirement investing was just, signing that little paper when you get your new job and the money goes out of your paycheck and so on and so forth. But now we know it's more than that. You need to be aware of what's going on, invest in the correct things, and do it a little bit differently than the traditional approach. So I really do appreciate all of this. I think anybody picking up your book will feel the same. And to everybody listening, if you've been inspired, pick up your own copy, check it out, click on the links that we're going to put in the description box, because it's important stuff to know. It's your own future.
Right.
Yeah, well, thank you so much for coming on the show today, Steve. It's really been a great conversation. It's been an honor to learn from you, and everybody else, if you want to learn more, again, pick up the book. You need to dive deeper into this income-focused approach. It's again your own future for you to, it's only going to benefit you. So we need to learn more about it. And I myself am going to learn more just by continuing to read the book. I've read a bit from what I can see, but I'm going to pick it up, learn more, and that's the only way we can grow, right, Steve?
That's right. And I look forward to welcoming you into the community.
Thanks for that. Yeah, no, again, it's every time we get on a podcast, you learn more from the people who pop on and you build those connections. And now in retirement, it's another amazing thing to think about. So I appreciate it. So all of this being said, thank you for joining us. It's been a pleasure. To all of our listeners, again, check out the book. And remember that the real mission here, it's not just about money. It's about peace of mind. It's about shifting from, looking at your portfolio with anxiety to watching your income generate with confidence. And Steve has spent so many years perfecting this approach, so we know that it works and we've seen it work, and now we've shared it with us. So, implement it, learn more, check out the book. If today's conversation resonated with you, try it yourself. Sometimes the most powerful shifts come not from focusing on the crowd, but from questioning whether the crowd is heading in the right direction. So we need to be aware of that. So yeah, thanks again, Steve. It's been a pleasure. And everybody else, so this is Authors on Mission, where we explore the stories behind the stories that change lives. Thanks for joining us. And remember, your mission as an author or entrepreneur isn't just to succeed, it's to succeed in a way that creates lasting impact. We'll see you next time on the Authors on Mission podcast. Have a great day, everybody.
This is Danielle Hutchinson reminding you that somewhere, someone needs the book that only you can write. Visit authorsonmission.com to start your legacy. Until next time, keep leading, keep inspiring, and keep thinking in chapters. Have a great day.